Ladies and gentlemen, welcome back to the channel. There are big implications for the data that we're going to be getting released on tomorrow for AMC stock. This could help rocket AMC higher, as well as your small and mid cap companies that have not seen any love at all in the past year and a half now. So I want to get into this concept that really doesn't get talked about too much at all here on this channel. It really doesn't get talked about too much ever anywhere in the retail community, and I do think it's finally to that point that we should make a video on this. This could essentially start a short squeeze with AMC stock, and it's maybe not for the reason that you expect, because again, it's hardly ever talked about in this community. Now, there's two sides to every coin. We'll look at both sides here in this video. In the meantime, hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, let's get straight into it with essentially what's the deal for tomorrow. So, CPI. CPI is going to come in tomorrow. That is the big catalyst. Now, let's go ahead and pull it up and see. But your headline inflation rate is apparently expected to come in at 0.2%. 0.2% month over month, stretched out for 12 months, is 2.4%. The Fed's inflation target is 2%. That would mean that essentially the Fed is accomplishing its goals. If inflation stays at 0.2% month over month for a while, that's fine. The Fed wouldn't care about that at all. That would be welcoming. Now, last month's reading was 0.4%. On an annualized 12-month basis, that's 4.8%. That's not so good. So if you come in at 0.3%, that's 3.6% on an annualized basis. Not as good, but still okay, I guess you could say. It's trending in the right direction. You come in at all the way at 0.2%. I mean, Fed's accomplishing its goal in real time, right? If it comes in at 0.4%, not going to be so good. Now, the headline inflation rate year over year, this is what the markets reacted to most last time around. Last time around, core actually reaccelerated, but headline inflation dropped and markets rallied because headline dropped, which is really ass backwards. But hey, I'm not going to try to disagree with the markets. That will only take you so far. The year over year numbers expected to come in at 4.1%. Last month's reading was 4.9%. This would be a sharp deceleration on headline inflation month over month and year over year across the board. Sharp deceleration is what you're expecting. Now, the core inflation rate, that is the problem child. The core inflation rate year over year is expected to come in at 5.3% for the year over year. Last month's reading was 5.5%, so only a small deceleration year over year. Core inflation month over month, you're expecting this to come in at 0.4%. Last month's reading was 0.4%. So you're expecting no change, no improvement to core. And I think that's where we're in a very interesting dynamic, where personally, I think that the headline inflation rate might be pricing in too much deceleration. At the same time, core might not be pricing in enough deceleration. So really the trick here, and what you would want to see if you're bullish on this market, is core to actually come down. Headline inflation, it looks like it's all but kind of guaranteed to come down. If core comes down, that's not expected to, that's where you get a big bullish reaction. Now, what is so significant about this inflation report compared to the last inflation reports is that you are finally at a place where on the headline month over month reading, you could be in line with 2% inflation at that 0.2% month over month reading, if that does happen. Now, what that does and what that will do is essentially bring down the cost of capital. It will give you more multiple expansion in your small and mid cap companies, which AMC fits that bill. But what it really does is it drives down bond yields. So driving down bond yields makes the cost of capital cheaper. For an example, if the 10-year treasury is paying you 3.5%, then why would you lend me out your money at 3.5% or below that? You wouldn't do that. You wouldn't lend that to a business, right? So there's multiple factors that go into lending out money, capital, obviously. But as a simple one, if I wanted $1 million loan, keep in mind Treasury's paying you 3.5%. If I wanted $1 million loan for 3.5%, would you do that? Would you give me that loan at 3.5%? Absolutely not, because I am more risky than a government bond. Now, when you probably give me that loan for like 6, 7 to 10%. And this is kind of how you can look at businesses as well. Now, why was capital so inexpensive over the last 15 years, but specifically during COVID and 2021, why your stocks really just rallied for no reason? Because when a 10-year treasury was paying you 0.5%, I mean, you're going to lend out money for 2% all day, and that's what people did. So tomorrow you could start to get multiple expansion, and you could start to see fundamentally companies like AMC actually start to benefit quite a lot from cheaper capital. AMC is still in a position where they might need to raise capital at some point down the line, in which it's almost a certainty that they will have to. So that's why tomorrow's inflation report is going to be so impactful for our markets. It might be the first time, again, where you can actually see a path to 2% inflation on, with that headline month over month reading. Now, if we go ahead and take a look at what the markets did today, the S&P, the NASDAQ, they ripped towards the last hour and a half of the day. Absolutely ripped. This looks like someone knew something and started to buy the markets ferociously. You actually found support at 430. You didn't even go under 430 today. 430 was a major resistance over the last couple of weeks. You found support there today. I don't think that is for no reason. So I do think small and mid-cap companies might be able to do well coming tomorrow, because someone obviously knows CPI is going to come in better than expectations. That's an obvious here. Now, to what degree, how the markets react, I think we could debate that. Maybe it got priced in today. I mean, the NASDAQ was up 1.7%. They're both at 52-week highs, just absolutely soaring. That's a possibility. But as of right now, I got to lean towards a bullish reaction in the markets. This could actually start to spark a short squeeze if, based off of the cost of capital getting cheaper, the odds of bankruptcy going down after tomorrow, well, AMC stock could catch a pretty nice rally off of that. And if you start to make your way to, call it $5 per share, there's a lot of calls sitting at $5 per share, and there's a lot of puts that would go out of the money. So that could also lead into a gamma squeeze, more than I would actually say a short squeeze. Could be a gamma squeeze that starts for this week, guys. So there you have that. If we take a look at the Ortex data, something is also weirdly happening with AMC. Cost to borrow fees are jumping. Cost to borrow numbers from Interactive Brokers almost doubling here today. At one point in the middle of the day today, cost to borrow fees were around 115%. On Friday, they were 64%. So obviously, there's more volatility that is now being expected or priced into AMC right now, thus the higher cost to borrow fees. Cost to borrow average, 210%. Cost to borrow max, 306%. Cost to borrow minimum, 25%. Cost to borrow fees across the board, 2 to 3 to 4x since what you've seen on Friday. Very encouraging. Now, the live short interest of free float for AMC stock is sitting at 23.16%. If you factor in the market maker shorts as well, you're a lot higher than that. You're well over 30% for the short interest. Now, you also have 120 million shares that are currently still sold short. Now, let's go ahead and talk about this new note put out today from Goldman Sachs. Goldman Sachs is going against the bearish thesis of Mike Wilson and establishing a new $4,500 S&P 500 target. Now, Maybe they're correct. Maybe they're the ones that know inflation's about to fall off a cliff. I don't know. Markets rallied today. S&P got an upgrade. Sounds weird heading into the inflation report. Someone knows something. But what they had to say about this was, quote, first, that the impact of interest rate hikes on growth is behind us. And second, that several areas of the market, including consumer cyclicals, tech, and communication services, experienced their own earnings recession last year and are likely to see accelerating earnings growth even as other parts of the market suffer. He writes in a fresh note to clients. His base case sees the S&P 500 dropping to 3,900. Now, it says pushing back on that is our call of the day from Goldman Sachs, where strategists have lifted their S&P 500 target to 4,500 from 4,000, making the bank among the most bullish on Wall Street. 4,000 target, 400 on the SPY to 450 on the SPY. That's insane. Now it says a team led by equity strategist David Kostin says their unchanged 2023 earnings per share forecast of $224 assumes a soft landing and is above consensus calling for $206. Now let's put this into kind of the math here, right? The average consensus is 206 for the earnings per share. If we do 206 times 19, that would be an SPY of 391. The SPY is at 436. So if the average analyst consensus is actually what the markets give us this year for S&P 500 EPS, let's go ahead and times that by a 22 multiple. Now you're at roughly 4,500. Maybe a 21 multiple is correct. Yeah, then you, with a 21 times PE multiple, you're at 432. That means the markets are as expensive today as the height of the rally in 2021. Let that sink in. With a 5% interest rate and inflation that is still, last we knew, 4.5%, 5%, or a little bit over 5% for core. That's expensive. That is pricing in perfection here. So I want to have a negative bias heading into tomorrow because of the multiple that is on the markets right now. Like when interest rates were zero, I mean, how are stocks trading at that same multiple after everything we've seen, and the possibility of a recession still at 65% chance, according to the average economist? That doesn't make sense to me. US dollar, S&P 500, NASDAQ, and the 10-year Treasury all in risk-on territory. Oil and gold are the only ones that are not in risk-on territory. And if we go ahead and kind of look at AMC's charts as well, I want to kind of switch gears back to AMC. The $5 put as well as the $5 call have a lot of open interest on them. So AMC closed at $4.80 per share. It was a gain of about 0.7% today. Decent, and you continue to trend higher. But if you get to that $5 level by the end of this week, you are going to see a gamma squeeze and potentially a short squeeze that start to play a role. And I think it's possible to get back to, $5.25, the 100-day moving average. 50-day moving average is at $5 per share. If you break that, 100-day moving average is logical. After that, 200-day moving average is firmly at $6 even per share. You could get back to that. If you break that on resistance, you could go even higher. And I think it would largely be fueled again by a gamma squeeze. What we seen on June 8th was a hammer candlestick. One of the most bullish candlesticks you can get. Basically shows that sellers were exhausted. There was not enough selling pressure to continue the downtrend, and the uptrend ensued from that. Typically marks a bottom. And when you actually got the first hammer candlestick pattern, when you hit the bottom this time around, that was on May 31st. You hit the bottom, have been trending up ever since this hammer candlestick. You just got another one of those today. And a hammer candlestick means you close towards the high as well. So I think when you put these things together, probably going to get a good inflation report, probably going to lead to multiple expansion, less fears of a potential bankruptcy in AMC down the line, which equates to the stock going higher, which could lead the options to also push AMC past some of our key levels, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.